Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of Chicago wheat and corn. I'll start with Chicago wheat. The key feature, or features, as there was more than one of them, in recent weeks has been the stalling at resistance formed originally back in July to November 2012, between 860 to 883, before making a most significant combined key reversal down and bearish engulfing pattern, if only just on the latter. This all happened 4 weeks ago. 3 weeks ago, on the Monday, the market made an even larger gap-filling combined key reversal down and bearish engulfing pattern, thus verifying the earlier move as the recent high. Prices have since punched down through some very key levels. These were the short-medium moving average, currently at 790, the August high at 786, the April and May highs at 769 and 767 respectively, and the important rising medium moving average, currently at 762. Now, this last one is where it all got very interesting, as prices could not maintain themselves below the medium moving average. Initially it was pierced last Wednesday, but we still ended up closing back up over this moving average. Since then, prices have pulled back up over the congestion formed at the April and May highs at 769 and 767, though as yesterday pointed out in a glaring fashion, this congestion is on a closing base only, well, right now, and not on an intraday basis. It also pointed out yesterday how the slowly rising median moving average is a main support level at this time. Now, in part, I suspect it may be because underneath the medium moving average there is, as I said last week, and I quote, as below that there was no support until the May 2014 high at 744. And perhaps as this did not appear to be that strong a support, then the 50% Fibonacci level below that for the whole of the 2021 action at 733. End of quote. I also added last week, and I quote, nevertheless, it still does not look that good right now. For the bulls, as since late November, this market has had a tendency to make 3 steps down, followed by 1 step up. We're now in the 1 step up phase, with a lot of previous supports above that have now become resistances. How well this medium moving average holds up the market is now key. End of quote. We are still in the, and I quote, 1 step up phase, but the way yesterday's strong bounce back up happened has been the first real sign that maybe, just maybe, this may be the end of the bearish dance, or at least the slowing down of the music. Just watch that medium moving average and watch it carefully. Chicago corn. I've mentioned the following now for a few weeks. Originally I spoke some 8 weeks before, and I quote, on top of all this there is one other option that made itself available. It was to look at the July to day action as a possible descending wedge pattern. There is merit in this with the lower trend line well below, currently at 460. And this week's move up, remember this was actually now 8 weeks ago, being a break upwards and away from either the descending triangle or the descending wedge pattern, end of quote. Now these two patterns were constructed over the summertime, and I've detailed them in depth enough already. However, I should point out that the upper trend line for both these patterns, which is currently at 496, has been the one that has been broken back in mid-October. Now going back to my original comments from 8 weeks ago, I added to the following 5 weeks ago, and I quote, I gave some thoughts on potential targets for the descending wedge pattern. Well, unsurprisingly, the initial potential target for this pattern ties in with target X3 at 605. However, the secondary target for this pattern is lower, target X5 for this pattern is in the 626 area. So these are the target, well, and that's the end of the quote. So these are the targets overhead for this large descending wedge pattern. However, even back then, I found some issues with the move higher, with the market exhibiting a lot of indecisive daily patterns. Now, that being said, I also again back then focused on what I saw was a key support, and I quote once more from 4 weeks ago. Yes, I still suspect the long moving average below, currently 570, may be at the core of the recent support. I'm still not sure if we will break higher or drop to test the congestion around the medium and short medium moving averages, currently at 569. To be honest, I would like to see some more action to help clear this up. I think I'll leave it there and watch to see if the recent moves higher turn out to be true or false. End of quote. Well, since then, we can easily see that the long moving average has indeed been the core of the support. It was tested twice in November and held up well both times. Additionally, the short medium moving average has now moved higher and is adding its muscle to the long moving average. Therefore, what we have ended up with is a very shallow bull channel, currently 570 to 601 since the start of November. This slowly rising bull channel is motivated by the slowly rising long moving average. That is where we are now and what is driving the market. We are now also very close to target X3 and also not that far from the long moving average, and it will be interesting to see which would be reached first. Now at this moment it looks like target X3 seems to be the more likely. However, just keep an eye on whether the market will stay or not within the bull channel. That could well be the key to the next major move. One final, and perhaps it may turn out to be the most important thing. We are super close to having a golden cross of the short medium moving average moving up over the long moving average. It may very well happen before Christmas. Now this is a lagging indicator, but it is still an important indicator, and yet another thing to watch out for. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.